good morning, fellow traders, and welcome to today's live trading session. As you guys know, today is Friday, May 26, 2023. We're coming near the close of a month. We still have a few more days until we actually get the end of the month. But what we can see right here is that price has been moving like it typically moves, respecting support, resistance, supply, and demand. We're going to talk a little bit about that today, but for the most part, what we're going to do is go over a few trading ideas, and then after that, Marvin's going to talk about what's taking place in the economy as far as all the news. How's the debt ceiling issue going? Is that still hanging over the market? All that good stuff. We're definitely going to go over some of that in a little bit, but we're not going to be with you guys for too long. I know we still want to go into the private war room and look for some ideas to trade and scalp the market. And if you guys have any time, please come. Of course, we do believe it'll help you out a lot. Eventually, as you meet with us more often, it'll definitely help you as a trader to see what you need to see in order to be confident in entering a position. So with that said, I guess we can move forward and continue with our session. But yeah, good morning, Adam. Good day, Joe. Good morning, Naomi. Good morning and good day to everyone who is in attendance and for those who did not make it on today or could not make it. But anyways, now that we got that good stuff out of the way, let's talk about some day trading opportunities. And what I'm going to do today, I'm going to start for certain pairs, I'm going to start on the daily and work my way down. Usually we'll start on a 1 hour chart, but we're going to start on this higher time frame daily chart where each candle represents 1 day's worth of activity. This is for those who are new. Each day represents 1 day's worth of activity. The more you see this, the more you get familiar with it. It's a lot easier than it may sound. But what we see here on this daily chart is that for a period of days, or really weeks, a few weeks, price has been sliding lower on the pound USD. GBP USD has been falling lower. A lot of this move is primarily due to US dollar strength. But what we see here, we see that price came down and it sort of hit an area of congestion or support or demand right here. We can see right here with this nice wick at the bottom, and we have the structure right here. So then what we're going to do, we're going to draw that in right around here. So what we have is this area of support or structure or demand, whatever you want to call it. And we can see that price reacted to this particular level, right? We saw a bounce today. If you look at most of the days during the week, we saw a sell-off in pound USD, but today is the anomaly. It's like price is going to retrace and make up for the slide lower. In other words, what we could be seeing is also profit taking from sellers being positioned up here, selling until price reaches this zone, and then closing out their sell positions. But at the same time, we have buyers coming in as well and entering the market. But for the most part, today has been a bullish day thus far. And if the day is bullish, then likely we need to look for a potential buy opportunity, right? That's obvious. We want to look for a possible buy on pound USD since price is respecting this zone of support. We see that price hit this support, and at the same time, price hit what we know as stochastics. Our slow stochastics is below this 20 level right here. It's below this 20 level. So then whenever you have price hitting support or level and it's below the 20 level, then you can bank on some type of reversal happening soon. So what we expect to do is look for a buy on pound USD. Price is in the middle of a retracement, and that's what we expect to happen is for completion of that retracement higher. And then after that, we may see a sell from there. But from here, what we're going to do is drop down to a smaller time frame. Let's drop down to the 4 hour. Okay. So right here, what we see is the 4 hour chart. We see that price bounced from this area, broke above this structure area, to the left. But we're still in a bearish environment. That's one thing I want to say. Price still looks somewhat bearish on this particular pair. So, we have to be a little bit cautious even with our buys. But what you would tend to notice is that whenever price does hit these strong areas of support or demand, and then stochastic is oversold, you typically see a bounce in price. But on the 4 hour, we see it bearish. So the daily is bearish, obviously. 4 hours bearish. 1 hour is where we see the market begin to shift, and it looks like the market wants to maintain a bullish bias or bullish sentiment. But we still have more time frames that are bearish than bullish. And that's the reason why you have to be somewhat careful with how you attack or trade this particular setup. But this is what I think is going to happen. I think we're going to have one more. Well, let me just do this right. Let me go to the 4 hour chart and I can share with you a little bit more. So this is the 4 hour chart. And what we may see is a push up into this zone right here. Let me draw it. Let me remove these lines right here. I think we're going to see a push into 4 hour supply up here, or 4 hour resistance. We may see price rally or expand all the way up to this zone on pound USD. Remember, we're trading currencies here. This is GBP USD. We're trading the pound against the US dollar. But I do believe we'll see price push into the zone, and then this is when we may see some type of reaction or selling take place. But what I'm banking on is the fact that we're going to see this type of move. We're going to see boom, boom, and then a correction, and then another impulse, and then this is when we could see another minor push lower before we see price push higher. But what we're going to do in this case, since we are expecting price to hit this area up here, we want to look for a buy on a dip in price. So with that said, that's what we're going to do right now. We're going to look for potential buy opportunities on a pullback in price. So there's multiple ways we can view this. And it all depends on what time frame you want to specialize on. Like I know this is the 1 hour chart. You can look for decent day trading opportunities on that. But a lot of the times we trade the 5 minute chart, and I may tell you what to do if you do decide to trade a 5 minute. But if you do decide to trade the 1 hour, then this is what you can sort of anticipate what could potentially happen. So you have to look to see where structure is. Look left, look to see where structure is. And right now, what we see on this chart, we look at this particular zone right around here, and we see that we have structure right in this particular area right here. Let me change the color. Orange. So we have, if you look to the left, we have, this congestion area right here, hesitation candle. But, for the most part, we're expecting something to take place right in this area. And really, we can go down all the way to the low of this candle's wick right here, this wick right here, and possibly even lower. But what we can assume is that price is going to come down into this zone right here, and then this is where we could see a nice buy opportunity form. So, if we trade this based on what we observe on a 1 hour, what we'll be doing is simply waiting for price to come into this zone right here, waiting for the sellers to come in and help produce this retracement lower. And then as soon as price reaches this zone, this level, then we could look for an opportunity to buy on bullish confirmation only. Like, we're not just going to trade the levels here. The reason why we don't want to trade the levels is because the 4 hours bearish and the daily chart is bearish. Momentum still looks like it's to the downside on those higher time frames. So what we want to do, we want to wait for price to come down to the zone, and then on a smaller time frame, we'll look for bullish confirmation, most likely the 15 minute, and then we could trade up all the way up to this area up here, where we expect the sellers to come in and eventually push price lower. But yeah, we're looking for buys on the pound USD, and we'll see how that goes. Now, if you drop down to the 5 minute, We can also see that, well, right now price is consolidating. There was an opportunity to buy on this small dip right here, but price may want to correct a little bit deeper. So then we'll be anticipating that for now. But there's a possibility for these levels to hold as well. This 5-minute demand to hold and for price to push up. But yeah. So in either case, what you're going to do is look for a buy once price reaches a zone of support or demand. And then as soon as that happens, you'll look for bullish confirmation before you pull the trigger and enter your buy. So yeah, this is pound USD. Actually, I wasn't supposed to start on this particular pair, but I decided to start on it. Since I started talking, might as well continue with it. But yeah, this is a buy opportunity that we're looking at on the pound USD. And yeah, this is what we'll be looking for. So yeah, are there any questions with this setup before we move on? Before we move forward? Going once, going twice. All right. So yeah, it looks like it wants to push higher. It may just be a 5-minute retracement pullback and a push higher. That's what I think is going to be, in all honesty. But we'll see. We'll see what happens. But if there aren't any questions, I guess we can move on to our next pair, our next asset, which will be, let me do one more. Let me do Aussie USD. Let's do Aussie USD. Let's start with the daily on that one. And let's do Aussie USD, AUD, USD. We're going to do a top-down approach today for these day trading setups. All right. So we're looking at the Aussie USD, and we're currently on the daily time frame. And as you can see, price was trapped in a range for a long time, really, for a few months on this daily chart. We can see that price was respecting the range, bouncing from support, then finding resistance, ricocheting out of, from resistance, bouncing from support, and then coming down, and then eventually breaking. But we was in this range for a while, but price broke to the downside a few days ago, and right now it's finding demand. Because if you look to the left, we have this particular zone right here, which is a zone of demand. Let me actually draw this in right here. This is a daily zone of demand. And what I'm going to do, well, I'm going to just color this green so you know. Okay, so then we knew that buyers were going to come right in this area. And like we said, whenever price hits a zone of demand or strong support, and stochastics is also oversold right around here, what we can look for is a potential bounce or potential reversal. And that's exactly what we saw on the Aussie USD. So then this one is quite similar even to the pound USD, because if you look at the environment on the daily, it's very much bearish. So then what we're expecting is some type of pullback on the pound. Price could pull back right into this area of congestion, or right here in this area, and then we could see price slide lower from there. That is what I think is going to happen eventually. But we could see a move for a few days, but who knows? It could just be one day. Price could retrace to the bottom of this range, where we have this area acting as support, and what was once support, or what once acted as a floor where price bounced from, could turn into resistance. So what was once support can turn into the ceiling and become resistance, and we can see price slide lower. So then, there's a number of things that can happen, but for the most part, what we're anticipating is another, continuation of this move, this temporary move to the upside on Aussie USD. Now, if you go to the 4-hour chart, we can see also that the 4-hour chart is bearish as well. Both the daily and the 4-hour are bearish. So we have to be careful. We could actually see price come down, make another retest, and then pop up higher. In actuality, that looks like it could very likely be the scenario. But anyways, let's go to the 1-hour. This is the 1-hour chart. We definitely see a bullish environment on the, oops, let me get rid of that. You see a bullish environment on the 1 hour right now. And if we were to trade the 1 hour, we would know exactly what to look for. We'll look for price to come down and test this area of demand, and then look for another, another possibility to buy. The reason why I believe we won't see this move down here right now is because remember what we said, price usually likes to go through a 3-wave pullback before any type of impulse or expansion. So this could be leg A, then we need to form a leg B, and then we get a leg C. And that could take us all the way up into this area where we could see the sellers come in and eventually cause price to slide lower. So then that's what I'm anticipating. That is what I'm banking on. So then if we're looking for that buy to form, that pullback to form, then where would we look for that pullback to find demand or support at? And you guys know how we approach the market. We look at areas of demand, like where do we have proof that the buyers came in at? So then the most obvious area is right here, right? Right here is where we have this obvious area that can act as 1 hour demand, where the buyers can come in at. This is where we expect buyers to eventually come into the market at. Also, we look left, we have structure to the left. Look left, structurally clues. We have these candles right here, which, act as structure support. So then whenever you have an area of supply or demand, in this case, demand coinciding or relating with an area of structure to the left, then that means that zone or that area is a bit more reliable, and you can bank on it being an area where price may react from. So then for starters, what we'll be waiting for is for price to come to us into this zone. And then from there, we'll look for a potential buy on bullish confirmation, because we're expecting price to bounce from this area. And then we'll trade it up all the way up to this area, possibly even to this zone right here where we feel the sellers may come in again on Aussie USD and push price lower. So yeah, that's something that we're looking for right now on this particular pair. So we'll be looking for a buy on Aussie USD, a buy scenario. Wait for price to come to you, wait for that pullback in price, and then enter that buy on bullish confirmation. So then that is what we're waiting for right now. Now, I know some of you guys may be counter trend traders. You may feel, okay, Mel, well, why don't you trade that correction? And you can, but like, I know for us, we like to go and trade in the direction where momentum is, or where order flow is temporarily. So then in our case, we're only looking for buys on Aussie USD. It's the same way with pound USD. We want to trade in the direction of that temporary order flow. At that time it's bullish, or at this time is bullish. We want to trade and only look for buys. We only want to look for buy setup. So then that's the reason why we don't really trade the corrections, even though oftentimes we do predict when it's going to happen, how it's going to happen, but we typically trade in the direction of the temporary order flow. So yeah, I don't know, Mar, did you have anything you wanted to share with the group? If not,
well, no, I know inflation data is about to come out in a few minutes. We could
yep, that is true. The core PCE data.
Yeah, PCE and core.
Yep. PCE. So then that comes out in a little bit. Here's all the stuff that's coming out right here. We have all this stuff. So we're going to have an eventful, few minutes, whatever, once these announcements come out. So we definitely want to be cautious and stay out of the market when that does happen, just to see and observe what price really wants to do, because that data is very important, especially the PCE data. I don't know. Well, Marvin, you can maybe share on it a little bit if you want to. You don't have to, but you can share on it a little bit. Or did you want to share? Well, I guess you can. I guess we can take a temporary break, and then you talk about that, and then we'll go right back into the charts later. Yeah, I'll just briefly go over it because it is important. Just like Melvin said, we have a slew of data coming out. If you look at this docket, we have personal income, personal spending. This is more discretionary spending, but The most important on the docket is our core PCE, or personal consumption expenditure index, and our durable goods orders. Both of them have a core reading that the markets will be focused on. And one will be more reflective of growth and demand, which is our core durable goods orders. But the other, this core PCE, is reflective of inflation or pricing pressures. And the PCE is the Fed's preferred gauge for inflation, or the Federal Reserve's preferred inflation barometer. And we know that the most popular inflation barometer is the CPI, the Consumer Price Index, which, we still look at because most of the market, looks at the core PCE, or not the core PCE, but CPI data. They look at CPI, PPI to get an idea of where inflation is and where prices are headed in the U.S. economy. So we're going to pay attention to that. But the reason why the Fed prefers the PCE, this report for this session, is simply because it's more reflective of the broader economy as a whole, and even the rural areas, rural America, because the difference between PCE and CPI is that CPI is more focused on the U.S. metropolitan areas within a 100-mile radius of most of our major cities. So then they take their inflation data just from the areas around, the metropolitan areas, and they sort of don't include rural areas or out in the country or even the broader economy. But the PCE data does. That actually takes into account like across the nation, like it takes into account everywhere. So then the Fed prefers to look at that. And plus it's also calculated different. The data is gathered differently, but it's also calculated much differently. So then, like I know there's a lot to cover even regarding that. I know we only got 6 minutes, but let's go real quick to the economic docket. What I'm going to do right here, I'm just going to let's see if I can pull up. Okay, let's see. I'm just gonna pull up the screen right here, and man, that's for the. Let me see. Okay, then I can probably do it real quickly. Let me just type Cleveland Fed. Okay, yeah, Cleveland Fed inflation nowcast. Okay, we can go straight to this link right here because the inflation nowcast is what we, preferably want to look at every time we get an inflation print that comes out, because what the Cleveland Fed tracks data to sort of predict where inflation will be. So this is the regional Cleveland, Federal Reserve Bank. They have a particular department or area where they assess all of the data coming in, and they come up with their own figure of what inflation would be. Now, this is different than the figure that the BLS, or the Bureau of Labor Statistics, would come out with, as far as inflation. So then they don't, of course, they're not supposed to have any, I guess, inside view, or I guess, peek into how they calculate or what they're thinking the inflation print would be, but they come out with their very own. So then lately, they've been sort of kind of accurate. Like the inflation nowcast has been a better predictor of where pricing pressures are in the U.S. economy. So then for today, we're just going to have the PCE prints that come out, not CPI. So then we already had CPI come out. I think that was last week, where we did see a softening, a deceleration of inflation. So then that information came out, last week for April. But according to the PCE, we're gonna see a pickup in inflation, like by just a few basis points. So then, according to the PCE, inflation is going to be a little bit sticky, and I know they don't have the last month's figure. We're going to have to pull up probably another calendar just to get. Let's just do this real quick. I'm just going to go to daily FX economic calendar so that you guys could see the print. So then we have here, okay, let's go to PCE. And we have the PCE year over year index and the month over month. Let's start with month over month. And we can see here how the headline month over month last month for the month of March, according to the PCE, inflation picked up by 0.1% or by 10 basis points. So we saw an acceleration of inflation. But for the month of May, or for this coming PCE print, they're forecasting, or the Fed, the Cleveland Fed is forecasting that we're going to see a month-to-month pickup of 0.31%. So that's about a 20 basis points difference in inflation, the pace of inflation. So then the Cleveland Fed, they're expecting inflation to pick up. And we can also see that even with our year-over-year numbers. Let's go to the year-over-year. We see the headline figure coming in at 4.2%. And for the headline figure for April, we see PCE coming in at 4.3 or 4.28%. You know, we can round it up, but we're seeing that that the PCE is going to sort of be different. They're pricing in a pickup of inflation. So then would that justify the Fed adjusting to a more hawkish tone like they have been for the past few days? Like since last week, we've been hearing a lot of Fed presidents come out saying that we need to possibly hike a little bit more, or we may need to do 2 additional rate hikes, or a little bit more to sort of tighten the monetary conditions in order to bring inflation down. So then we've been hearing that recently, which has been different than what they pretty much decided at their last Federal Reserve meeting in the beginning of the month. They were saying that this is going to be the last 25 basis point rate hike, and we're going to pause for a period of time and just assess what's happening. So, but yeah, I know we got 1 more minute. I know Mel was like telling me we want to. So then let's go to the chart and just see how the dollar responds to this news. So then what I'm going to do real quick, we can go back to our chart right here, and let me see. Should I go to the Dixie, the US dollar index? Let's just do that. I'll just go to the Dixie just to see what's happening with the dollar. Now, as you can see before the announcement, the pre-positioning of the dollar is to the downside. The dollar has been selling off. What we see this morning is we're seeing this positive, renewed sentiment, this enthusiasm in the market. Okay, I think we're starting to see some buyers come in, but let's see.
That's on the 1 hour.
Yeah, this is the 1 hour. Let's go down to the 5 minute or the 1 minute. You could just do that, but okay, it's interesting because you know, we're seeing some volatility, but it's kind of hard to say what's happening. But yeah, we're seeing some strength in the market. Most likely, the numbers came out a little bit stickier and probably higher than forecasted. We're seeing this spike in the US dollar. So then let's see what those numbers came out to be. Let's see. So I'm just going to go back to our calendar. Okay. So yeah, so then right now we're looking at it. So then we get 2 sets of data. We get the durable goods and the PCE. So then it can be kind of hard to sort of determine what the primary focus and bias is going to be, because both of them are important. But for our inflation print, I'm trying to wait for all of them to come up. Yeah, well, they're going to eventually come up because these are coming up. So then for durable goods, we see that it did improve. We're seeing durable goods orders pick up, or it came in better. I should say it was better than the forecast. We expected a drop in goods orders, but we saw good orders improved by 1.1% in April, which is lower than last month's figure. It was revised up to 3.3%, but it still shows a fair level, of demand for durable orders. Durable orders are pretty much any item that's sturdy, that's durable, like our washing machines, like our dryers, like our kitchen stoves. I think even vehicles or any durable good that can last more than 3 years. That's within that category. So then what this indicator is saying that there's a pickup in durable goods orders by 1.1%. Now, So we do have our inflation coming out. Core PCE picked up or ticked up by to 4.7%. It was greater than last month's figure and the forecast. And we also see the headline figure pick up 20 basis points to 4.4%. So it came in even hotter than the Cleveland Fed's figure. The Cleveland Fed only priced in or expected inflation to pick up by 4.28 or 4.3%. But we see here that the actual figures reported from the government came in at 4.4. So this is definitely a lot, hotter than what analysts, economists anticipated, and we saw the dollar spike to the upside on expectations that the Fed may have to do a hawkish adjustment and hike interest rates, which is actually supportive for the U.S. dollar. So then let's just go back to a chart right here and just see how the dollar has spiked. So then we not only saw strong, solid, durable goods orders, we also saw a strong inflation print, which lets us know that the U.S. economy is still pretty resilient and pretty sturdy and strong despite all of the interest rate hikes that have taken place. I think as of now, there's about 525 basis points of rate hikes that we've done since the end of 2021 into where we are now. So then that's a lot of tightening of liquidity conditions to deal with the beast of inflation. But as you can see, even though we have all of those rate hikes and we tighten monetary policy and there's ongoing quantitative tightening, which we haven't really focused on much, but we have all of this tightening and it's still not doing enough to sort of bring pricing pressures lower. The price of goods and services are still pretty sticky, even though we've been seeing them decelerate lately, but it's still pretty hot. It's still pretty entrenched in the market. So then will the Fed do more? And I'm pretty sure that Fed fund futures swap markets are pricing this in, which we may touch on, but I don't want to bore you guys for too long. Like I know Melvin has some more setups that he may want to go over, but as you can see, the dollar is rallying to the upside. On this news, is as if earlier in the session we had kind of like a buy the rumor, sell the news in reverse. Well, where we saw the U.S. dollar sell into this announcement, where we saw the U.S. dollar get weaker as we began to see this positive risk tone pass through the market. But right now, since we saw the core durable goods orders and the the PCE data, which is reflective of growth in the economy, we're seeing the dollar strengthen as traders, as investors expect more yield appeal to come to the dollar simply because the Fed is going to have to possibly do more, even do an additional rate hike or even possibly two to sort of help, tame the beast of inflation. So yeah, we see the U.S. dollar going up. Like a lot of people may think, well, it's due to the good news, and yeah, that's true to a certain degree. But in our world and how we framed monetary policy and how things are structurally laid out within our financial system, it's more beneficial for us to have a weaker dollar simply because that helps with import or with exports. That helps to encourage foreign entities to, buy U.S. goods. But and a U.S. dollar is strong too because that means that the purchasing power of our dollar can be used across the world. We can buy goods and assets for cheap, and it's always good to have a strong dollar as well. But for the economy is driven on trade, is driven on the exchange, the freaking exchange of goods and services. So it's more beneficial for us to have a weaker dollar. But as you can see right now, the dollar is being bid to the upside as investors, institutions, banks, whatever, expect the Fed to have to tighten liquidity conditions a little bit more and raise the interest rate on the dollar. So yeah, but that's pretty much it. We can get this news. Well, no, this isn't the new news right here, but yeah. All right, guys. So then that shifts things a little bit for the setups that we just gave you. I know we talked about pound USD and we talked about Aussie USD and we can clearly see here the dollar is rallying, the dollar is strengthening. So then that changes those setups we talked about before. So if we go down, let's do GBP USD. Let's do that one first. Pound USD, and well, it's right now. It's hitting this zone right now. It's hitting that zone of demand or support that we talked about before. And there's a possibility for price to respect this area, but with the nature of this move, I'm going to be a little bit cautious because what we could see a deeper retracement, and we may see price retrace all the way down to, let me just draw it, all the way down to really this area. Let me just highlight the whole area. This area right here is where we could see price retrace to. Price can come down to this area, find some demand, and then push higher. So we may get a deeper retracement. And the reason why I say that is because you guys know how we usually look for pullbacks. We typically want to see something like a three-wave pullback. Remember, on most pullbacks, you see that. On about 70% of pullbacks, you see something like a three-wave pullback or three-wave correction. But there are cases when you don't see it. Like for instance, even on this recent pullback, I don't even know we see it on here. Let me see. On this move right here, let's see. Well, I think we do see a three-way. We have to drop down to a smaller time frame in order to see that. So let me see. Yeah, this one right here was a little bit harder, but we saw boom, boom. Well, I consider this all leg A, leg B, leg C, and then we have to push. Yeah, so yeah, it was a weak leg C. But yeah, for here we did see a three-wave. Leg A, leg B, and a weak leg C, and then that's when price came crashing down, pull back after the break, and then we would enter the sale. But yeah, we typically want to see a three-way pullback, and I know right here all we see is leg A. We just see one leg. So we still have to see. We have a leg A. We still have to see a leg B and a leg C, which can come down into this zone, and then from there we'll enter our buy and trade that to the upside. So then we're going to be a little bit patient with this one. All right. And my interpretation is that we won't see a violation. We won't see a violation of these lows down here for pound USD. That's my prediction, but you never know. So we'll see. But anyways, let me go and go to Aussie USD. Let's see how that's looking. All right, Aussie USD is quite similar. We see the strong move into the zone of demand, and we typically want to see a three-wave pullback, leg A, B, C, and yeah, we don't see that yet. So we're going to be a little bit patient with our buys, but yeah, still doesn't change much of what we're looking for. We're still looking for buys on both Aussie USD and pound USD, and who knows, maybe after the announcement gets flushed out, like all the mayhem behind this announcement, not mayhem, but the flow, the order flow due to that announcement, the short-term order flow due to that announcement, we could see price bounce from this level and push it up. And it doesn't have to create a three-way pullback. It really doesn't. All right. So with that said, let's move on. Let's go to another pair. Let's do this. I know we talked about this earlier this week, the Aussie yen. We might as well talk about it a little bit today. Aussie yen. All right, because this was a beautiful one. I wish I would have jumped into this one because, as you guys know, we're testing a swing trading approach, a swing position, swing trading approach. And like I said, we're testing it. It's going well thus far. We would be in, decent profit right now if we would have entered, within the zone at the time, we talked about it. But we can see that price is now reacting to this level. And we're going to give you guys some nuggets real soon on that, especially if you want to do this full time and not be tied to the charts. Like not be tied all day looking at the chart for hours. You can definitely take a swing trading approach where you're primarily looking at the higher time frames like the daily or maybe even the 4 hour at the lowest, and then you can execute trades. Just set and forget. You'll set your trade and you'll walk away and forget about it. Because I know a few of you guys may be interested in that. And you can still make very decent money. especially when it comes to trading with these prop firms. But yeah, some things that I'm going to compile and putting together right now, and we may do like a quick workshop where we talk about the rules of how to do it properly, because you don't want to trade every single level. It's just certain levels you want to anticipate bounces from. So then, we'll talk about that really, really, really soon. Just trying to get the nuts and bolts behind that put together and tweak a few things. But for the most part, what we see on Aussie USD, we see price corrected into this daily zone like we predicted, and we mentioned that price was going to bounce from the zone, right? It was going to eventually bounce and test and reclaim or test these highs up here, right? Or take out the highs. That's what we're anticipating. So then what we want to do, we want to have a bias to buy Aussie yen. And if you look at the chart, especially the yen index, the yen currency index, it's been selling off, really. It's been selling off for a while. We've been seeing yen weakness. And I know for the past few days, it's been yen strength. But right now, it seems like the market wants to rotate. And we're starting to see some weakness come in, right, in the yen, which means that Aussie yen should bounce. We should see a bounce and a continuation of this move to the upside. So with that said, what we're going to do is drop down to the 4 hour, and we can see here that the 4 hour is giving us a nice move to the upside. Yeah, actually, this was from the last section. We predicted that price would come test the zone, and then we'll see the sell-off in price, and that's exactly what happened. I wasn't able to get into this move. You'll be able to see it a little bit clearer on the 1 hour chart, but we did get a retracement up to this first zone, and then that's when we seen price sell off right there. So then that worked sort of according to our plan, but it was a little bit difficult because price action was kind of crazy for really the past few days. It's been kind of crazy, so it was kind of difficult to read what was really going to happen, but it did hit the zone and then fell down. So if you would enter that trade, you probably made money. Most likely you did make money on it. But anyways, price is now reversing because we're at this demand zone like we predicted. We predicted that price was going to bounce from this zone, and we see that right now with this strong move to the upside. So yeah, this is on the 4 hour chart. The environment is bearish, but it looks like we could be seeing bullish order flow kick in because of the rate or the volume behind this move to the upside. So yeah, let's drop down to the 1 hour. Okay, so right now we're looking at the 1 hour chart. You can see this move a little bit clearer where price retraced into the zone and fell off, but we can delete this stuff right now. We don't really need this right now. We can simply just talk about what we're going to do right now. All right, you can just talk about that. So again, what we're looking for is a buy opportunity on Aussie yen because we're anticipating price to go all the way up here to test the highs. That's what we're anticipating. So, what we can do, we can simply wait for a pullback on Aussie yen, right? Wait for a retracement in price. Now, the question is where? Where would you look for price to go? Well, of course, the obvious area is structure. Look left, structure leaves clues. And let me drop this line right here. So then right around here in this area, you can look for price to come down to this neckline of this consolidation, because what we have here is consolidation or bottoming or this accumulation. This is an accumulation phase where it was trying to accumulate buy orders, and then all of a sudden we get the break, and that proves that, hey, the buyers beat out the sellers, like because we had balance in this area. There was an equal number of buyers and sellers. They were competing with each other when price was moving up and down, up and down. But as soon as we get price to break this level, that means the buyers won. The buyers out-competed the sellers, and we should only be looking for buys from here on out because they're the stronger figure right now. They're the stronger individual, you could say, looking for the buy. So that's what we want to do. We want to look for buys. Oops. We want to look for buys. And what we're going to do is look for a buy on a retracement in the price. So we have this neckline right here of this consolidation or accumulation or bottoming. This yellow line represents the neckline that price just broke and closed above. But we have also a few things we want to point out. But before I point out that, let me see if we have anything else. Okay, yeah, we do have something that could act as an area. We have this nice area with this nice wick right here, this long wick right here. And this is right where our yellow neckline is, right around here. So then what we can assume is that somewhere within this area or zone, we could see, potential buyers come in. So then what I'm going to do is, of course, just draw in here, from here to here. So we look to the left, we see the wicks. The wicks, long wicks, to sort of help you to determine where the buyers could be. Okay, so we have this area right here as a zone of potential demand where the buyers can come in at. But one thing I want to point out also is something that you should also be aware of. Like in this area, I know we don't talk about it much, but let me just draw this in right here. And let me change this. This is what we call imbalance or inefficiency, because as soon as price broke this zone right here, it had a strong break of the zone, and that's when we saw imbalance come in. Like right in this area, we see imbalance, or what is called inefficiency. So anywhere within this zone also can be an area where price could bounce from. So again, what we want to do is wait for price to come to us. We're not going to chase the trade. We're going to wait for the trade to come to us. And then from there, we'll look for a potential buy opportunity on bullish confirmation. And we can trade it up to the next area of supply, which would be like right here, or even this next higher one up here, because this one could maybe mitigate it. And we could anticipate price pushing up into this zone right there where we expect more sellers to eventually come in and maybe create a sell-off before we see a temporary sell-off, before we see a continuation of that bull move to the upside. So then that's what we're anticipating right now. So yeah, we'll see. But again, we'll be looking for buys. We'll be only looking for buys for now because the momentum's to the upside. All right. So yeah, are there any questions about what we just talked about here? Going once, going twice. Okay, so then I guess for the sake of time, what I'm going to do, I'm just going to strictly move from here and go to the NASDAQ, and then go to the S&P. I mean, not the NASDAQ. I mean, not the S&P, but maybe look at gold and then see what is going on, and then we may quit early for today, right? Unless you have some stuff you wanted to share, Marvin, with the group. But yeah, so then let me just hurry up and get through those, and then we could actually do that. So let me just go to the NASDAQ. I'm just going to go to NBQ 100. That's what we've been working on lately. So let me go to, definitely have to change some of this here. All right. Okay, so as you guys know, we mentioned this, I think, a few days ago, how really within this area, we're expecting some type of rotation to take place soon. When will it happen? Oftentimes we don't know. But one thing we can rest assured is that a rotation has to happen soon. Right now, price is testing the edge of this supply zone right here. I believe this could be weekly supply. I would have to go back up to the weekly chart. Let me just do that right quick. Okay, well, not exactly, but yeah, this is that one-to-one measured move we talked about earlier, from this area all the way up to here. So, right around here is where I'm expecting the sellers to come in soon. We're testing the edges of that zone, and we should anticipate something to happen soon. But price doesn't have to do that. Price can just crash through these levels and continue a rally to the upside. And if that does happen, then you have to follow momentum. You have to follow the order flow. You have to follow the story of the market. So right here, we see that price is, It was consolidating for a bit, came down, pulled back, but now we're pushing up higher in this zone. And most of this week we've been bullish, really, for the most part. Well, I mean, of course, today we will have to see how today closes. But for the most part, price did push up. But I have a funny feeling we're going to see a sell off, right after the U.S. Open. I just have that funny feeling that the Nasdaq will probably sell off after the U.S. Open. So, or the New York Session Open, which will be around 8:30 my time, Central Time, 9:30 Eastern Time. But anyways, we see price pushing up into the zone. So then what we can anticipate is a possible reversal on a smaller time frame. So we go down to the 4-hour. What we can see here is that price came down, pushed all the way up, rallied right here, and we're seeing a struggle to push higher. And if you draw in a trend line, you can draw in a trend line right across these highs right here. So then what we can see here is that, hey, price is pushing higher, but it's having difficulty making these, new highs. It's just having a difficult time breaking higher. And I do believe we should see, an eventual correction at least for today. Price, based on what I'm observing, formed a what? Well, let me ask you that. What pattern formed? Well, let me give you guys some help. What happened right here? We had price move all the way down, and then all the way within a matter of hours, we have this 100% retracement, right? What is that called? For those who are familiar with price action and technical analysis, when we see something like that, what is that typically called, and what should you anticipate in the very near future? Let me see what you guys say. I'm just going to give you guys some time to maybe chime in. I know we've covered a lot of different things, but I just want to make sure you guys remember some of the core things and themes and concepts that we touch on from time to time. Now, if you guys are new, like, this may all sound like jargon to you, but don't worry. We're going to try to simplify it for you. Like, I know when Marvin was talking about the fundamentals, it could probably go over your head, like core PCE, PCI, spending, all that stuff. It's out of your pay grade. You may be saying that, but trust me, it's not as hard as you think. But what we typically focus on is the technicals. We focus on technical analysis, looking at price on the charts to determine what we should do next, because the price really follows the fundamental. It tells you what the market may want to do. So then we put more emphasis on technical analysis, price action, than we do on fundamentals. But it's always good to know. But if you guys don't know the answer to that, okay. Yeah, I know Marcus said, would that be a V recovery? Yes, it is. It's a V recovery or V bottom reversal. Yep, exactly like Naomi said. So then she said, expect a pullback to support. And she is correct. So then whenever you see that, what you can expect is some type of pullback to support. Or you expect what we know to be the infamous inverted head and shoulders, where we have the left shoulder, head right here, and a right shoulder maybe forming right there. But that's what we're anticipating. We're anticipating some type of correction lower before we see the rebound. And yeah, that's what we're going to be looking for. So what I'm going to do is simply expect price to correct. And that could happen right after the New York session. We could see price correct and head lower into this particular zone, since it is testing this trend line right here. It seems like it's having somewhat of a difficult time. Now, after the New York Open, it could very well break this trend line. And then if it does do that, then we have to change our bias a bit. We have to change the plan up a little bit. But it doesn't mean that we're going to abort what we're seeing. Right now, this is a bullish scenario. So we want to look for that. So then what we're going to do, we're going to expect for a pullback down to this area, possibly to create what we know to be the shoulder of an inverted head and shoulders type setup right here in this area. In this area, we can consider this, well, I know some people would consider this 4-hour demand, but it's more so like structure. But wait for price to come back. Remember, this is a larger time frame. So what we're anticipating on the smaller time frame, if we do see some type of confirmation of this move lower, then we may want to look for sales only on the Nasdaq, but we'll see. But what we're anticipating is this correction and an eventual continuation of this rally to the upside. But if price breaks lower, if it breaks this long zone all the way and it, you know, comes down here, then what we can look for from here is a possible reversal or maybe even consolidation, because from here, I'm just going to draw it in. From here, we do have this trend line as well. This trend line that's somewhat being respected. So yeah, it can come up and then bounce from this area. But what we see right here is what you would call a rising wedge pattern, which means momentum could be sort of waning a little bit. And we should expect a deeper correction possibly soon. So yeah.
Yeah, and I just, also want to add that really how the day plays out really depends on what the market chooses to focus more on. Because, we're heading into a holiday weekend. We know that this is the start of summer trading season. And usually you'll see that euphoria that like markets want choose to, how can I put it? Choose to embrace more risk and become more excited as we move into the summer season. So then we saw yesterday that we did have this AI fueled rally. If you guys have been following the news, you know that a lot of this move, the surge to the upside in the NASDAQ is due to, it's more AI driven as far as this whole AI revolution and how that's underpinning
artificial intelligence.
Artificial intelligence is underpinning equities, especially the NASDAQ, which is more of our tech-based index. But like if this, for today, we're seeing some of that also pass through into sentiment for today. So if, when the opening bell sounds, which is really in a few minutes, about 30 minutes from now, if the market chooses to still focus on the benefits of this AI revolution and what that would mean and to the world and how this is going to be pretty much a bubble in itself, then we may see the market sort of dismiss what came out with inflation data simply because the Fed had already prepped and primed the market for this type of a possibility of inflation remaining entrenched. You remember on last week, many of the Fed members were saying, hey, we may have to do more rate hikes. So in some way, the market was sort of already conditioned for this. So yes, we're seeing a response in the dollar, but I think there's a possibility that markets may have already factored that in. I think the reason why we're seeing an overshoot in this dollar rally is simply because we didn't expect it to overshoot the forecast or estimates like it did. But I think for the most part, the markets may want to close out the week with a more positive tone as we move into Memorial Day weekend. And also there's some rumors that Congress, there's some positive developments with the debt ceiling negotiation there. I guess from what we're hearing, there's rumors going around that they're closer towards coming to some type of compromise. So then that's going to also provide some level of positive sentiment and, cheery markets as we close out this week. But yeah, I just kind of wanted to point that out, that we could see, stocks continue its rally to the upside to close out the week also.
Yeah. So that's why we have to wait and see what price gives us. Trade what you see, not what you think or not what you forecast. You have to trade what you see. So if we do see a break to the upside, then we definitely want to stay on that side of the market. Order flow still to the upside. We want to look for buys. That's obvious. If price does correct, then we have to anticipate this move and anticipate a potential bounce right in this zone. So it's all about playing and really being adapting to what the market gives you. We're not going to be rigid and have a certain approach. I'm only looking to do this because this is what I strongly believe is happening. If price shows you something differently, then you need to pivot and do that instead. So we'll see. Right after the open, we'll have more clarity on how price wants to move for the day, especially given maybe a few minutes or so after that. After the open, we'll know for certain. But yeah, this is the NASDAQ. This is what we're sort of anticipating, and we'll see what happens. But if price does break to the upside, then we know what to do then. We'll look for opportunities to buy on, on the retest of this structure level, or even a deeper retest. So yeah, you guys get the point. But yeah, this is the Kiwi. I mean, not the Kiwi, the NASDAQ. Are there any questions about the NASDAQ before we move forward? Going once, going twice. All right. So let's do one more. Let's do gold, and then we can just call it a day. I'm just gonna make this real quick with gold. All right. So right now we're looking at gold, and it's quite similar to what we saw with Aussie USD and Pound USD. Price is hitting an area of daily structure support. Look left, structure leaves clues, is reacting to this area. So that could be indicative of how price may want to move for today. We are seeing dollar weakness, and that dollar weakness can also carry over into stocks. Like Marvin mentioned, we could see stocks rally. That's a possibility, but do see gold bounce from this area. And I think Doc had a nice trade on gold from earlier. Thanks for posting that. But what we can anticipate is a possible, well, let's see. Let's go down to the 4 hour. Okay, so yeah, this is the 4 hour. And we see price corrected into this area of structure right around here, right? Corrected into it. So we may get one push into this area of structure, and then price may sell off again, because I'm anticipating a double bottom on the 4 hour, where price comes here, then we get this double bottom, and then that's when we see the real move to the upside. This is what I'm anticipating for gold. I'm expecting price to maybe fall lower and retest the lows again before popping up again. But before we do that, before we make that claim now, let's go to the 1 hour chart and let's see what's happening. So on the 1 hour chart, this is what we see. We only see, because remember on pullbacks, we want to see a three-wave pullback. We want to see a leg A, a leg B, and a leg C. I think leg C could be forming right now. And as soon as leg C forms, that's when we want to look for a sell, and then trade this down to the lows down here. So then that's what we're going to anticipate for this particular pair. I think this will be a good one to trade as well, and look for a buy really soon. Really soon. Well, yeah, look for a buy. But yeah, it didn't give us a three-way pullback like Pound USD and all of them didn't as well. But we're still anticipating a potential buy once we see that happen. But yeah, so again, we're looking for price to bounce on gold, to test the highs up here, to create that leg C, and then from there we're looking for a sell-off in pound to test the lows down here. Or not, yeah, in gold. Excuse me. I said pound, I mean gold. XAU USD. We expect a bounce from this zone up to resistance, and then from there, we expect gold to sell off and head and test the lows down here. So yeah, I apologize for that. I think I said pound. I think I may have said it a few times, but it's gold, XAU USD, gold. That's what we're analyzing right now. So that's what we're expecting. We're expecting that type of price behavior to take place. But yeah, that's it, guys. What we can do, we can cut it off a bit earlier today. I know we definitely, we're going to meet in a live private war room. So if you guys can meet us, that'll be great. We'll be in there. We'll let you guys know when we jump in. But that's pretty much it. I hope you guys got something out of today's session. Yeah, and I know for those who are new, this may sound like jargon to you, but trust me, the more you spend time with us, the more you see our sessions, the more you're going to get familiar with certain things, and you're going to identify it on your own. You're going to know it without us even telling you. You're going to see things before we even tell you. And then that's when you know, okay, you're really catching it. You're really understanding how to really do proper technical analysis. But yeah, that's it, guys. Thank you guys so much for coming. We really do appreciate you guys. And as we always say at the end of every single meeting, remember to always count your blessings, not your pips. and we'll definitely see you soon. I'm looking at the comments. I know Marcus said, trust me, he was lost too at one point, but now he's doing great. He's doing well. He's understanding how price typically moves. And, you know, we expect the same from you guys as well. You guys will understand too. It's not as complex as it may look. Trust me, it's not. The hard part is really the psychological, mental side of trading. That's the difficult part, your emotions, your psychology. If you can control that and keep that in check, then trading will, in a lot of cases, be a piece of cake, especially when you understand how to view technical analysis properly and do it properly. The hard part is really the emotional, psychological part that it can really take a long time to really master. But we'll talk about that stuff later. But thanks again for coming, guys. We really do appreciate you. And as we always say, remember to always count your blessings and not your pips. And we will definitely see you. If not in the private war room, we'll see you next week in the live webinar session. You guys have a wonderful rest of your day if you can't make it, and talk to you soon. All right, kid and bye.